What's good everyone, welcome back to another video. In this video, it will be more of an educational one compared to my normal analysis videos. And this video, I'm going to be talking about how to get great entries in crypto and also how to get high probability trades. Stay tuned to find out. Okay, so let me just jump straight into the point. So to get great entries in crypto, one thing I need to let you guys know first. This is very important, especially in crypto. In crypto, liquidity is super important, and price usually seeks liquidity, fix out the first move, and then expansion from that fake out move. So what do I mean by that? So crypto is very manipulative, and just let me give you one example. You can see a clear range environment in ETH, right? Just to give you an example. Price bounce at the resistance multiple times, push down, etc., right? But let's say you want to catch the short trade again. Okay, you're saying like you put an entry over here at the range highs again. You're expecting price to hit back all the way down, correct? Then your stop loss will be just above these highs. Most of you guys would be trading like that, right? But as you can see, price of ETH, when approaching the range highs again, instead of just rejecting off this area over here and coming down, it pushed up way even higher, taking out all the stop loss that most traders would have their stop losses at. And then, once that's taken, it pushed all the way back down. So what I want to emphasize in this video, to get extremely good entries, or sniper entries in fact, in crypto especially, you want to enter a trade where most people have their stop losses at. Okay, this is the number one point I want to state in this video. Very important. So let me repeat, we should enter a trade at areas where people have their stop losses at. So coming back to this example again on ETH chart, we can see a clear range, right? So we put our range highs. You can put it here or label it here, up to you. Depends on preference. I prefer over here because we can see clear wicks above and push back down, right? So let's say I would wanted to enter a trade over here. Okay, let's say price pushed down already, failed to break, but I identified that it's a clear resistance and I'm anticipating price to push back down lower. So I'm waiting for price to hit back range highs again, all right? And then I'm expecting price to fall back down. But again, as I mentioned earlier in the video, I do not want to enter when price just taps this resistance. I would want to wait for price to push even higher to take out all these stop losses, and then I enter a trade. So two ways you can enter this trade around this area. Firstly, you have a limit order just around this stop where most people have their stops at. Let's say right here, 1848, right? Your stop loss for maybe ETH, you should have it around maybe 1 to 2% stop loss. Okay, so you set a limit around this stop loss area and look at it. Easy trade back down to the range lows. There's a very clean, how many RR trade? Let's see, it's about 1.2%, let's say, to the range lows. Okay, this is a clean 3.55 RR risk to reward ratio. Very clean. Even limit order, anticipate price to push up to take out all the stops and then start to push back down. Very clean trade. Or you can enter manually. Okay, enter manually means it's a much safer entry where, let me bring back that chart over there. Okay, moving into the 1 hour, you want to look for entries around this area. So price push back up, you want to see price come back down below the range. Okay, depending where your range high is. If your range high is over here, once price comes back down, holds below, you can actually enter already in this candle over here. Or you can zoom into the 15-minute chart, whatever you like, enter. Stop loss just above these highs. Okay, this shows a higher probability of price pushing back down compared to when price just taps it. Okay, So this is a very high probability trade. I would take this any time of the day if I see it, of course, if I'm on the charts. Definitely you want to enter again. Enter at price at the place where most people have their stop losses at. That's your entry. Stop loss will be, of course, you just give a 1 to 2% stop loss. And then when price pushes back down, of course, you can just lower your stop loss to just the weak highs. And then you risk manage. Very, very clean trade. Let me give you another example. Okay, so let's say now the opposite, the inverse, right? If you are in a long bias in a higher time frame, you have established this range already. You have the range highs, range lows. Same thing when you're longing. Of course, you want to wait for price to grab the liquidity of all the stop losses before taking a long, and then you'll enter at where everyone's stop losses are. Again, same thing. Price forms a range. Okay, most people would try to long over here, but most people will try to long over here. The stop losses just below these lows, and look what price did. It pushed down, took all the stop losses, hunted all the stop losses, grabbed liquidity, and then pushed back up all the way. So similarly, as where you took a short limit over here, here you can take a long limit. Mostly, let's say, just a little bit lower, 1705, 1702. Your stop loss again, maybe just 1% off or 2%. See, price never took. Price usually just have a wick and then start pushing back up once it grabs all this stop loss liquidity. So of course, limit orders are more riskier in a sense where you are just guessing where price stops. The safer entries, of course, manual entries, you will want price to come back above and reclaim and hold above this support line. And on this 1 hour chart, you can see very nicely, price reclaim, hold as support, retested as well. This would be your entry. And then of course, your stop loss just below all these wicks, aiming for range highs, and depending whether you want to hold longer or more, you can hold all the way to the on higher time frame key levels. Okay, so these just 2 examples. Let me give you one last example. Where is a very one? Okay. So on ETH, we can see the recent highs we've made, right? Back in April 17. Yep. We hit a high of 2140. You can see a clear range again on the 1 hour chart. We are at key resistance, and therefore we are anticipating a sell-off, right? So similarly, we establish a range highs, range lows. You do not want to enter the short right when at the resistance. Of course, high probability trades, you have to wait for a deviation or a wick above, push up to take out all the stop losses, and then that will be your high probability trade, and also that is where your entry is. Look at this clean wick over here above. Let's say you had a short limit again, just above where all the stop losses are. You had a 1 to 2% risk, targets the range lows, and if you held on even more, well, that's a huge ass trade. Okay, but that's just another story if you held. Another way, manual entry, similarly, remember I just said, let price hunt the liquidity first, comes back below to the range highs and holds below. That will be your entry. Short position right over here. Stop loss just above the highs, 2150 or so. You're targeting at least the range lows. That is a very easy 3 RR risk to reward ratio already. If you held it even lower to support regions, to even 1943s, that's a key area for me. That is a very nice risk to reward ratio at 8.95 RR ratio. Very, very clean. And you see, you don't have to take trades every day. Just wait for price to take out liquidity first. Okay, have your limits or have an alert if you want a manual entry. Wait for a range to form. Wait for liquidity to be taken. Easy trade. Okay, so let me summarize in this video what I want to share with you guys, how to get great entries. Number 1, of course, establish a trend first on the higher time frame. Secondly, wait for a range to form, either an hourly or 4-hour or the daily, up to you, depending on what kind of trader you are. I prefer waiting for an hourly range or 4-hour range to be formed. And then, thirdly, wait for trades now, either at the range highs or the range lows. Waiting is, in my opinion, is better than taking multiple trades or multiple losing trades. Wait for high probability setups like what I mentioned over here. Okay, so that's my third point. Wait for trades first. Once price hits a range high or a range low, wait for price to take the liquidity first. For example, this one, take the liquidity, take out all the stop loss from the highs, then you short. Okay, do not enter right at the resistance over here. Remember my number one point of this video, enter at an area where everyone has their stop losses at. Okay, that will be your sniper entry, and that will be your best entry you ever taken in crypto, and it works in every altcoin as well, not just on ETH or whatsoever. It happens everywhere. I've seen this multiple times. High probability setup. Of course, sometimes you will take a loss, you will just continue pushing up, then well, it is what it is. Trading has losses as well. You don't win every single trade. Okay, so this is just it from me. Hope this video helps you out, and hope this tip helps you out in your trading as well. So remember, the markets are always here, but your capital may not. Peace.